Capy is smart, but Capy does not know the smart words. And tonight, Capy has a dinner party. So here are the fancy money words, one by one, for Capy's small but growing brain. Asset, a valuable thing Capy owns. A melon phone, a burrow, a whole juice business. If Capy owns it and it is worth pebbles, it is an asset. Liability, the exact opposite. A debt Capy owes, the burrow loan, the shell debt. Every pebble Capy has promised to somebody else.
Wait, I thought the shell was free money.
Net worth, everything Capy owns minus everything Capy owes. Assets minus liabilities. It can be a big cheerful number or a small deeply upsetting one. Income and expenses. Income is pebbles flowing in from a job, a business, and investment. Expenses are pebbles flowing out, rent, bills, and mostly food. Capital. The pile of pebbles Capy uses to start or grow a business. Not, as Capy first assumed, a large city with a river running through it. Stock. Buy a stock in a melon company and Capy owns a tiny slice of that company. Buy most of the slices, and Capy is suddenly, legally, the boss.
I own the stock now, so where is my office?
Equity. How much of a business Capy actually owns. If the company is worth 1,000 pebbles and Capy owns 51%, Capy is the majority owner, and yes, still the boss. Liquidity. How fast Capy can turn a thing back into pebbles. Cash is instant, so it is very liquid. A burrow takes moons to sell, so it is not. It is easy to pour water, a boulder less so. Hedge, a second bet in case the first one goes bad. All in on melons. Capy also buys some coconuts just in case of a melon storm. The coconuts are the hedge. Arbitrage, buy a melon cheap on the far bank, carry it across and sell it dear on the near bank. Why? Because near the bank, melon rare, melon valuable. Derivatives, a contract whose value depends on something else's price. Capy agrees today to buy melons next moon at a fixed price, and then simply prays the price moves the right way. Market cap, the total value of a whole company. The share price times the number of shares, 100 shares at 5 pebbles each, a market cap of 500. Speculation, buying a thing not to use it but purely to sell it later for more. Maybe from research, maybe from a deep hunch. Almost always, honestly, the hunch. Bull market. The whole melon market is climbing. Everything is up. Cappies are giddy, optimistic, and absolutely certain it will never ever go down.
Up and up and up, and we are never going down.
Bear market. The whole melon market is falling. Everything is down. The giddiness is gone. So, sadly, is the vine. Volatility. How wildly and how fast prices swing. 5 pebbles, then 2, then 10, all in 1 week. High volatility and glow pebbles. Capy wishes you the very best of luck. Diversification. Do not put every pebble into melons, however tempting. Spread them across melons, coconuts, apples. So if one thing pops, Capy does not lose the whole pile. Leverage. Borrowing pebbles from the bank to invest more than Capy actually has. If the price rises a little, Capy wins big. If it drops a little, Capy owes big. Dividends. Own shares in a business that is booming, and it may hand Capy a few pebbles every few moons just for holding on. The more shares, the more pebbles. Yield, the dividend, as a percentage. Invest 100 pebbles, receive 10 each year, and Capy's yield is 10%. A rare bit of maths that makes Capy happy. Capital gains and capital losses. Buy a melon for 1 pebble, sell it for 2. The extra pebble is a capital gain. Sell it for less than Capy paid. That, sadly, is a capital loss. Collateral. The bank is not convinced Capy can repay, so Capy promises its card if it fails to. The card is the collateral, and the bank very much intends to keep an eye on that card. Default. When Capy simply cannot pay back what it borrowed. This leads to penalties, more debt, and sometimes the big dramatic one, bankruptcy.
I declare bankruptcy.
Short, Capy bets a price will fall. It borrows 10 melons, sells them high today, buys them back cheap later, returns the melons, and quietly keeps the difference. Margin, like leverage. But the pebbles are borrowed from Capy's broker, and if the price drops too far, the broker calls demanding more pebbles at once. That call has a name, a margin call.
The price is plummeting. I need more pebbles now.
Monopoly and oligopoly. A monopoly is one company controlling an entire market, charging whatever it likes. An oligopoly is a few companies, all nervously watching each other. Subsidy. The council hands melon farmers a few extra pebbles for every melon they sell, so melons get cheaper for everyone. That helping hand from the council is a subsidy. Appreciation and depreciation. Appreciation is a thing quietly becoming worth more over time. Depreciation is a thing becoming worth less. Capy's burrow up. Capy's melon phone very much down. Valuation. What is Capy's melon tree actually worth? It makes 100 melons a year at 5 pebbles each, so the tree is worth 500. That estimate is a valuation.
how about 3 pebbles and a firm handshake?
Correlation. How two things move together. Melons up, coconuts up, positive. Melons up, coconuts down, negative. Melons move, coconuts shrug, no correlation at all. And that is enough smart words for one evening. Go forth and impress the other Capys at dinner. This was Capy Cents. Capy is a capybara, not your financial advisor. So, what does Capy think of the state of the river? Arbitrage. Indeed.